Most traders don't blow up because they're unlucky. They blow up because they're lying to themselves. And the market exposes every lie with perfect accuracy. Hi, I'm Rick Graham. Today, we're breaking down the real reasons most traders fail. Not the surface level excuses, not the I need a better strategy nonsense, the real stuff. The internal battles, the hidden habits, the blind spots that take people out quietly. Because the painful truth is this: the market doesn't destroy most traders. Their own behavior does. And if you don't understand these reasons, you won't just lose trades, you'll lose your entire shot at becoming who you're trying to be. But if you stick with me to the end, you'll see exactly why traders fail and how to avoid becoming one of them. Here's the brutal part most people avoid. The market doesn't care what book you've read, how much you studied, or who you follow. It doesn't care about your confidence, or your dreams, or your need to win. The only thing the market responds to is action, your action. And the majority of traders fail for one simple reason. They violate discipline. Not once, not twice, but every single day until their account is nothing but a memory. And if you think this doesn't apply to you, that thought right there is the first warning sign. The truth is quiet. It doesn't try to convince you. It just waits. And when the market finally tests you, really tests you, you will either act with structure or you will panic like everyone else. I've seen this play out over and over. I've lived it. The biggest trap? Early success. That first win, that tiny profit, that harmless little green candle that makes you think you're blessed by the trading gods. It feels good. And because it feels good, you don't question it. You let it stroke your ego. You convince yourself you get it. But that early win is a trap. It rewards randomness. It disguises luck as skill. And that false confidence is the seed of every disaster that comes later. New traders take a small win and instantly size up. They think, if I can make 50, I can make 500. They chase noise. They ignore structure. They assume the market cares about their previous results. But the market has no memory. I made the same mistake. My first streak of wins made me arrogant. I thought I had mastered the game because I dominated bucket shops, fast fills, small stakes, a sandbox. But when I stepped into real markets, reality didn't just hit me. It steamrolled me. Spreads widened, fills slowed. The tiny edge I thought I discovered evaporated. My capital didn't drift away. It vanished. And the lesson was clear. Confidence without structure is just exposure. Most traders never understand this. They aren't failing because they're stupid. They're failing because they're overconfident without reason. Then comes the most expensive mistake in trading: holding losers. It always starts small. A pullback, a dip, nothing to worry about. But then the hesitation kicks in. Instead of closing the trade, they stare at it. They start bargaining. They zoom out the chart. They look for excuses. They look for news. They look for hope. And hope is the most expensive position you will ever take. I've held losers longer than I want to admit. I gave them just a little more room. I convinced myself the market was wrong. But every reason I had was fiction. The loss was the only truth. And the truth doesn't negotiate. Here's the rule most traders ignore. A small loss is a trade. A big loss is a mistake. And the difference between the two is time. That mistake leads to the next failure. Trading without a system. Most traders rely on feelings, opinions, rumors, hot takes. They jump into setups they don't understand. They exit not because the chart told them to, but because their emotions bullied them into it. That isn't trading. That's guessing. And the market destroys guessers. I spent years trading on impulse. I saw a candle move and I chased it. I saw volume spike and I jumped. Sometimes I won. More often, I didn't. But the real damage wasn't the loss itself. It was the inconsistency. I had no rules, no structure, no way to know whether I was improving or just getting lucky. A system fixes that. A system tells you when to enter, how much to risk, and where to exit. It keeps you from lying to yourself. It forces you to be accountable. And when you follow it, you stop trading emotions and start trading reality. But emotions don't go quietly. Fear whispers that exiting is weakness. Greed whispers that holding longer is genius. Both voices sound convincing. Both voices destroy accounts. The traders who survive aren't the ones who feel nothing. They're the ones who act in spite of what they feel. Then there's size. Traders think bigger size means bigger profits. But size does not create profits. Structure does. Precision does. I never entered full size right away. I tested. I waited for confirmation. I let the market prove me right before I added exposure. That's not hesitating. That's protecting your future. Most traders blow up not because they were wrong, but because they were too big when they were wrong. And when they finally lose, instead of studying the loss, they blame everything except themselves. That's the dividing line between traders who grow and traders who disappear. A loss is data. A loss is information. A loss is a teacher. And if you don't study it, you're doomed to repeat it. Then comes overtrading, the silent account killer. Most traders think they need to always be in a trade. They think sitting still is falling behind. But the truth? Doing nothing is a position. Waiting is a strategy. Patience is an edge. Some of my best wins came from waiting longer than everyone else. And most of my worst losses came from acting faster than I should have. Another failure, taking advice from others. Traders love opinions. They love hot takes. But the moment you act on someone else's conviction, the trade is no longer yours. And when it goes wrong, and it will, you have no structure to fall back on. The tape is the only voice you trust. Price is the only opinion that counts. And finally, the most misunderstood rule in trading: cut your losses short, let your winners run. Simple words. Almost nobody can do it. Traders cut winners out of fear and hold losers out of hope. And that single behavior separates the 90% who fail from the 10% who survive. You want the truth? Here it is. You don't fail because the market is hard. You fail because your habits are weak. Every trader who blows up shares the same root problem. They think they can bend the rules. They think structure is optional. They think discipline is something they can work on later, but later never comes. Only consequences do. The market isn't your opponent. It's a mirror. It reflects your behavior. It exposes your flaws. And the moment you stop respecting it, it reminds you why discipline is not optional. If you made it to this point, you're already ahead of most traders. You've heard the reasons. The real ones. Not predictions, not theories, behaviors, habits, choices. Cut losses without hesitation. Let profits breathe. Trade a system, not emotions. Wait for real setups. Trust your own analysis. Study every mistake. Respect size. Control yourself, or the market will control you. You don't have to fail like everyone else. You just have to stop acting like everyone else. If this helped you, hit the like button, subscribe to the channel, and drop a comment about the one trading mistake you're working on fixing. Or ask me a question. I always love interacting with fellow traders. Are you ready to take your trading to the next level? Click the link in the description now and get started today. Check out the next video on your screen, and I'll show you exactly how trading the higher time frame gives you the best edge in trading. I'll also explain how to time your entries once you've locked in the higher time frame direction. See you next time.